Hello, welcome to another podcast of Master Investor. Glad to be here again on another valuable talk on money, business, and investing. My name is Jose. I'm the founder of the company and brand. Welcome back. And if you're new, ensure to subscribe here and also follow us on all of the social media platforms. We're live on YouTube right now, and we're going to be speaking about building our asset column, specifically investing for passive income and why it's important to master this type of income. As you know, our mission here at Master Investor is to elevate the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income and true wealth. Today, we're going to be covering some points on how to invest for passive income. It is important because that's how we build total freedom. And here at Master Investor, we focus on assets that we control with our companies, meaning that we are incorporating companies to control assets. And as individuals, we look poor. We don't make money as individuals, okay? We make all of our money through our assets that we control with our companies. So you will have 100% control over that company. Here at Master Investor, we care that we keep the power to ourselves, meaning that we are investing our money actively. We're not giving it to anybody to do it for us. We're not giving it to any firm to invest it for us. We're going to build our assets, and we're going to be buying our assets ourselves. We're going to take massive action. We're going to use our knowledge and our experience that we're getting on a daily basis to build our wealth. And we can start with one digital product. You don't have to have a huge company per se. Don't let that scare you. It could be one digital product that we haven't even touched, we haven't even seen physically. It could be a print on demand, meaning that once we get an order, then the order gets placed and it gets printed and gets delivered to the customer on autopilot. We don't even need to touch it. All we have to do is present the products to the customer through marketing using systems. And that's what we're going to be mastering here at Master Investor, is the acquisition of a system of systems, because that is a true business. It's a system of systems doing the selling and telling for us on autopilot. So if you have never made money while you're asleep, then please let us be the first mentor that helps you do that, because for us that is like the best feeling ever. Once you experience that, you'll never go back to think that you have to work hard physically at a job to earn a living. You can actually thrive and create your dreams and build assets that are making us money. We have shown you how to create digital assets very quickly using tools like BookBolt. On the description on YouTube's live stream, you can see the link to that tool. If you go to our YouTube channel, you'll be able to find all the resources that we have to help you build digital assets. And digital assets could be no content books as they call them, which are journals or calendars, things that the end user will have to fill in inside, something to write, a space inside, but it will just have a cover in just a cover page, that's it. But no content books are those books that have nothing in the inside, basically, that are empty, just a space for the end user to write. And we can create this very quickly with this software called BookBolt. And we show on a live stream exactly how to do it and how to upload it into the self-publisher of Amazon, KDP. And you will learn how to do that by creating print on demand, and you don't have to touch the digital product. And all you have to do is begin to create these digital non-content books that hundreds and millions of people will get to see, because as we know, Amazon holds one of the top biggest store of books in the world. And books are the one category that is the biggest, that has the most different categories within that category. There's so many different topics in books. So we have a pool of people that are looking to buy journals, books, and so forth. You can also create your own ebook. We're going to show you inside of our ebook and digital course how to create a digital business, whether you're starting your own ebooks, your own digital courses, or you can use other people's digital courses. We're going to show you everything that you need to know exactly to build a successful asset column that produces passive income and capital gains income, because some of the assets will only create capital gains income. Remember, we want to diversify among the 5 asset classes that exist. Number 1, real estate. Number 2, business. Number 3, crypto. Number 4, paper assets. Number 5, commodities. We're going to talk about some of those today. We're going to cover some of them because some of those asset classes are built to build passive income. So we want to invest in those asset classes. We want to become aware of how to invest, how to raise the capital. The job number 1 of an entrepreneur is to raise capital. The number 1 skill is to master how to sell without selling using systems through smart marketing. And the job number 1 of an inside investor or master investor is to make money work hard through sound investing. Pardon. Therefore, investing for passive income is the best approach to build true wealth. There are 2 types of income that we can get from investing: capital gains income and passive income, or also known as positive cash flow. The most important words in the business language are cash flow, right? Because if a business doesn't have cash flow, then there's no business. The cash flow is like the blood of the business. And there are 8 elements that composes the cash flow triangle. You will learn about the cash flow circle, the cash flow triangle, the cash flow system inside of our ebook. So if you haven't read it, make sure you get it, because it's going to change your whole perspective about money, and it's going to give you the core values of a master investor, the principles of a wealthy entrepreneur. And you're going to have the data to take action, the proper data. Okay, so it's important that we monitor what we are reading, what we're listening to, who are our partners, and everything that we're doing, because it matters, right? And make sure that you protect your time. Don't say yes too quickly. I said that earlier on a live stream, but I want to repeat it for our audience on our podcast here, because you want to be protecting your deeper yes, your dreams. And sometimes there will be people that will come in our lives to try to get you off your track, off alignment. You have to have a plan of action every single day to keep yourself accountable for the main goals that we must accomplish on a daily basis to get us closer to our dreams. And we need to do that with discipline. It's not easy per se. It takes effort and it takes mental power. But I believe that if we're listening to this podcast today, then we do have the power to do so. Okay? Because not everybody is ready for this type of information, you see. The student will show up when that person is ready. And a master is always a student. We always go back to the basics. Master investor has to do with each of us building that investor to be a master investor, because we're going back to the basics every day. We're learning about financial education on a daily basis. Entrepreneurship is a journey that doesn't stop. It grows every day. We learn more about business. We don't graduate from this. And we understand that. So a master, the world goes back to learning more about business, about people, about wealth. That's why one of our expenses on our expense column needs to be investing and financial education and self-development. And that's what we do here at Master Investor. We work on the 4 pillars of an extraordinary life: health, wealth, love, and happiness. Let me know if you have any questions. Feel free to write it down in the chat, whether you're looking at this on our live stream here on YouTube, or also if you're listening to us on our podcast. Write down your question. We will come back and answer them as soon as possible, and get into our inner circle so that you start building the asset column. Rule number 1 in our community is that we work to build passive income and make money work hard through sound investing. And the reason why that is rule number 1 is because that is exactly what the ultra wealthy do on a daily basis. And like I mentioned earlier, we are the authentic brand of money, business, and investing, and we keep it 100% raw, meaning that we don't change anything of the wealthy mindset, because the formulas of wealth are already created. So we don't need to reinvent. We can innovate, and we suggest all of our partners to always innovate to stay ahead of competition and so forth. But the formulas to creating wealth are laid out for us, and we're taking it from the ultra wealthy mindset and we're adopting their values, the way they think about money, the way we operate, right, with money, and the way we invest money, the way we make money, which is very important. That's what we're going to learn today. Investing for passive income and why it's important to master investing for this type of income. There's just one method we should invest if we intend to do so. The master investor method of investing is to make passive income. Today's summary: to become truly wealthy, the most promising approach is to invest for passive income. The ability to create passive income demands a high level of financial literacy. Investing in a variety of areas can create steady passive income. We can most clearly distinguish between two quite distinct kinds of investors in difficult economic times. For instance, we might speak with someone who appears prosperous but is actually having financial difficulties, and they might say something like, "It is rough out there. Their 401k is taking a beating." Conversely, a prosperous investor with a distinct background may declare, "I'm doing fantastic. Money keeps flowing in." What separates these two investors from one another? To begin answering that question, it is best to examine the three distinct kinds of cash flow patterns that exist. And the short answer is lack of financial education. That's why they speak like that. Those who invest in 401ks and fake assets have lack of financial education. They have fear due to the lack of knowing how to invest. So they end up giving their money away to salespeople that earn commissions by having their money invested in the market. And that is not investing, that is trading, that is holding and praying that the market goes up. That is too risky, and that's something that we don't want to do here at Master Investor. We want to make sure when we invest that we do it with conviction. We know exactly what type of income we're going to get back, and we're going to touch that type of income because we're controlling the entire investment. We are the ones that launch the business or acquire the business. We have the company and we control that company, and that company holds those assets or whichever asset we're building. Okay? The three distinct categories of patterns in cash flow. We can find thorough explanation of the three types of cash flow patterns in our article, Cash Flow Patterns Determine How Wealthy We Will Be. But it will be beneficial to go over them again here. Number one, cash flow pattern of the poor class. It is common knowledge that the impoverished living paycheck to paycheck. There are also no mistaken. The majority of the impoverished have cash flow pattern similar to the one below. Paychecks are the source of income, which is then swiftly allocated to different costs. With any hope, they will be able to pay for the monthly expenses. If not, they incur debt, usually in the form of credit card debt, which only serves to worsen their situation by raising their monthly costs, because that credit card debt is bad debt. I don't want you to think that having debt is bad, because here at Master Investor, we encourage everyone to utilize debt to acquire a business, to acquire an asset, to invest. So if you have a credit card, don't buy a liability first, buy an asset first with that money, and then produce income with that asset that will pay the debt back and also leave us with positive cash flow every month that we make a payment. And after or while it's making money, it also leaves us more positive cash flow to pay for whatever expense, that liability that we want to have. We can use that asset to buy the liability, acquire the liability that we want to have. But we're not going to be paying it with our hard-earned money, because we don't want to work for money. We want to make sure that our businesses are working for passive income, working to bring us capital gains income too, so that we can utilize that income to pay for any expense that we have or any liability that we want to acquire. So it's not about shrinking, it's about expanding our asset column, focusing our efforts and energy to building that asset column, and specifically understanding how to invest for passive income. Getting a better paid work or taking on another job is their only chance to advance, just to make ends meet. It is really depressing way to live. And I mentioned earlier, if you don't love your job and you're having these thoughts about escaping and creating something better for your life, then you have the answers, you have the tools, you have a community here at Master Investor. You can start building your digital business after you get off your job, if you have a 9-to-5, and you can start taking it seriously, and you can soon be out of that job because you can create a lot of income fast through direct sales, affiliate marketing, building passive income online. So you can supplement that income that you're making from your job so that you can pay for your living expenses at the moment and can continue to grow. So it's about living above our means, never below our means. We want to expand. As you can see, the cash flow pattern of the poor class, they earn a job, the money comes in to the income column and the income statement, and it goes down to the expenses and it goes to someone else's asset column. Inside of the financial statement, we'll find 6 basic important words: income, expenses, assets, liabilities, and cash flow. Number 2, cash flow pattern of the middle class. People who live paycheck to paycheck are not limited to the impoverished. The middle class cash flow pattern is seen here. The cash flow pattern of the middle class, they own a job, right? And they're either a dentist, doctor, attorney, accountant, and etc. They still have to work for money, earn income. They lack systems and financial education. So their income comes from owning a job, right? They own a small practice. They have to show up every day to see their clients. Either they have to charge more money or they have to work more hours to make more money. And then that income comes down to their liability column from their income column, and it goes to someone else's column. However, it goes up to the expense column. I didn't put that here on the diagram. I have to fix it because after the liabilities, after it flows to the liability column, it has to go up to the expense column and then goes out to somebody else's asset column. And I'll fix that soon. The middle class frequently appears wealthy to an outsider peering in. They may have large incomes, opulent homes, luxury vehicles, and more. However, in reality, they are merely surviving the rat race. Rather than allocating their income just to living expenditures like the impoverished do, they purchase obligations like luxury automobiles, homes, and trips, which causes their money to disappear from the expense column. They may also invest some money in 401k, but as we will see later, that is an asset. That is not an asset. It's not an asset, it's rather is a liability. The middle class exhibits an extreme trend whereby their taste increase and they desire more as they take on greater responsibilities. As a result, they take a job that pays more and take on additional debt, and of course takes their time away because now they have more responsibilities and a lot of times they have to be there longer. The frightening part is that they won't be able to pay their bills if they lose their work. Why? They frequently have significant debts and costs, bad debts, right? There's nothing wrong with having debts as long as we have assets that pays for those debts. I told you, there's nothing wrong with the liability column as long as we have assets and businesses and investments that are paying for that. Otherwise, then there's everything wrong if you only have liabilities and you have a job that are paying for those liabilities because you're living to pay for those liabilities. You weren't born to live and waste your time to pay for those liabilities when you can actually have them for free by investing and focusing on the asset column, you see? So focus your energy on building the asset column with assets that we control. That's the holy grail, to make money while we're asleep. They frequently have significant debts and costs, and their only source of money is their salary. With luck, they will be able to find another work before it catches up with them. They file for bankruptcy if they don't. Number 3, and they also lack financial education. Now, this type of income, earned income from the poor class and the middle class, is taxed at the highest bracket. So even before they get a paycheck, they already have lost majority of their income through taxes. Number 3, cash flow pattern of the wealthy class. The financial flow, cash flow pattern of the wealthy and the middle class are very different. This is how it appears. On the income statement, we'll see that the money comes from the asset column The income is made through passive income, positive cash flow, and capital gains income from assets that we control, that our companies control, and we own those companies. So we picture the financial statement, and the income literally comes in from our asset column. And of course, it goes down to the liability column, and it flows into the expense column, into somebody else's asset column. However, when we have excess of positive cash flow, a lot of times, and financial education, because the only way that we can have excess of positive cash flow is by having financial education, meaning that we can turn a lot of our liabilities into assets. In other words, a lot of times, once we get really good at investing, we can redirect that income that is coming from our asset column and goes down to the liability column and then up to the expenses column. And now, instead of going out to somebody else's column, those expenses are our expenses, because we turn those liabilities into assets. So we can redirect a lot of those expenses back into our asset column. And that it takes financial education to do that. But we're going to learn how to do that, and you're learning how to do that through this amazing content that we're delivering every single day. We have over 300,000 views on YouTube right now. We're heading towards 500,000. We're growing here on our podcast. We're getting great feedback from all of our members. So I want to appreciate the time that everybody has taken to be part of our community. And remember, it's all about putting in that work on that asset column, focus on that asset column. And I want you to have the tools and everything that we're using to make money so that you can empower yourself. You have control. We will never sell investments or tell you where to invest your money. The one place that we will tell you to invest your money is yourself, in financial education and self-development and things that will make you better, things that no one can take away from you, that makes you more valuable, because we understand that the more valuable we become as a community, the more we get rewarded, right? Because the market matches the value that we have. And remember, money magnifies who we are. So if you're a happy person with money, more money will make you happier. So it magnifies the character that we are. So who are we? Start developing great habits. Let's teach ourselves how to become the best version of ourselves, how to speak properly, how to act properly, how to raise capital, how to invest, how to do what we're doing here at Master Investor, control systems, right? And understanding how to bring in cash flow. To put it simply, cash flow from their investments is how the truly wealthy get their income. We then purchase liabilities and cover their expenses with this type of income, passive income or capital gains income. To achieve this, we don't need a job or an income from a job. Each month, the funds arrive in the form of passive income from our assets, and we use that to pay our bills. What separates earned money from passive income or earned income? The primary distinction between the individuals we meet previously is whether they have earned or passive income, which is fundamentally a mentality difference. First, let's look at the cash flow circle. I want you to imagine a circle, and in that circle, I want you to divide it with two lines, one going vertical and one horizontal in the middle. On the left side of the cash flow circle, we find the employee on the left top corner. On the left top bottom or left bottom is the self-employed, and the employee have a job and the self-employed own a job, and they work for a system. They lack system, right? The self-employed and the employee works for a system, and they're exchanging time for money. They have to shop to make money. On the right side of the cash flow circle, on the right top slice, we find the business owner owns systems that makes us money when we do not work. And on the bottom right, we find the inside investor or the master investor, which we make money work hard for us through sound investing. Wealth is created on the right side of the cash flow circle. We all form part of this cash flow circle. The question is, which type of player are we today? And which type of player do we want to become next? Sometimes you may be playing all the players at the same time, and that is okay. However, total freedom is found on the right side of the cash flow circle, because that's where we have control over our time, because we have excess of cash flow coming in. We have financial education, we have financial experience. And that's where we thrive, on the right side of the cash flow circle. The E stands for employee. Workers seek a wonderful position with a competitive income and value security. S stands for self-employed. Self-employed people appreciate their independence and not having a boss over them. Often are socially awkward. They don't trust others because they are the finest at what they do. They are employed. They do not own a firm or a company, a system of systems, right? They cannot make money if they do not work. They are therefore not truly free because they still have to work, even though they are free in the sense that they are their own boss. B stands for business owner, and Uber drivers and all these people, they land on self-employed, okay? Because you have to show up to work, even if you have a boss. Some of the Uber drivers think that you own a business. You don't own a business. You're self-employed. You're basically on your own job. B stands for business owner. Owners of businesses also value freedom and independence, but we get it through teamwork and systems development. Our companies generate passive income, thus we don't need to work for income. I stands for anti-investor. Among the people in the cash flow circle, investors are the most financially savvy. By investing in assets that generate cash flow each month, we use our money to make money, but we can only do that when we have financial education. So it does not take money to make money. What it takes is financial education, and then money can make money. The mentality and financial flow of individuals on the left and right side of the cash flow circle differ from one another because the E's and the S are worried about their security, their labor for earned income, that is money that other people create and then compensate them for. They basically market or sell their time. True freedom is a worry for the B's and I's. To pay for our expenses, we build companies and make investments that bring in passive income and sometimes capital gains income. We will never have to work another day of our lives if we so want to. We have the freedom to choose what we want out of this life because we have excess of cash flow. We have mastered the most important element, one of the most important elements, money in this life. There are two kinds of investing when it comes to the type of income that we get, passive income and capital gains income. People who are on the left side of the cash flow circle may consider themselves to be investors. For example, they might be someone who gets nervous when they think about their 401k not doing well. Actually, they are more of a gambler and a trader than an investor. Remember, it's not the investment or investing that is risky, it's the investor behind the investment that makes investing risky. The more financial education we have, the more control we have over our finances, and the more sound decisions we make when we are building wealth, because we are going to invest to make passive income and see it quickly in our hands. And of course, sometimes capital gains income, and we want to touch that money, we want to control it, we want to have full voice of that operation. We want to make decisions. We don't want anyone else to make decisions for us. If, for example, they invest in a 401k plan, they will be dependent on the fund's monthly fluctuations. Even worse, because it deducts money from their pocket each month rather than adding to it, it is truly a liability. If earnings are collected, then it might be considered an asset. That is a liability until then. This is the appearance of that investment pattern. Capital gains income, assets on the asset column will only create profit if the asset goes up in value or someone buys it or refinance it if there's a loan on it, like a commercial real estate property or a property. It doesn't have to be commercial. A lot of people did that in 2008. They refinanced their house, they got money, they used it as ATM, but what happened? Lack financial education. So what happened to that money? They used it to invest in liabilities. They thought that they were investing in their asset, which was their house. They either created a bigger kitchen, they fixed their driveways, they made it look nice, and they thought it was going to go up in value. But that house is not an asset because first they still have to go to work to pay for that mortgage. They're living in the house, so it's not an asset because it's taking money away from them every single month. It's not putting money in their pocket, and that money that they acquire from that refinance they used it to acquire liabilities. They thought that they were investing in an asset, they were going to make it even appreciate more, not knowing that the market goes up and down because they lack financial education. So the banks made a mistake to give the money to the wrong people, right? And so that's what happened in 2008. However, for savvy investors, we took advantage and we capitalized on opportunities that arise on those times because we use debt to our advantage. You see, debt is tax-free, so it's important that we learn how to use debt because taxes are the highest expenses humans have. So if we can minimize taxes all the way to zero, then legally, using the laws and debt, then we're already wealthier than the average human being. It's all about using the new rules of money, understanding how to create wealth so that we can create total freedom in our lives. When E's and S's invest in a 401k, they're hopeful that the value will increase and they will eventually be able to sell it and profit. Like any bets, it is a chance, but it might pay off. Regretfully, it also has the highest taxation of any investment. Real estate investors are located on the right side of the cash flow circle, which represents investors seeking to generate passive income, also known as cash flow. For instance, we receive monthly rent from our properties, take advantage of favorable tax treatment, and invest very little of our own funds in our transactions. Additionally, we only perceive opportunity when the market declines, since these kinds of assets are put up for sale. Assets pay for expenses each month because these investments are meant to generate passive income. This is what real freedom looks like. This is the appearance of the investment pattern of passive income. If you're watching this on the live stream, you can see the financial statement and the diagram. If you like to have this article, if you're listening to this and you like to see it, go to our website, subscribe to our newsletter, and you can have these articles sent via email, and you have the diagrams. So as you can see on screen right now, there's a financial statement. We have the income statement, the balance sheet. We have the income column, the expenses, and on the balance sheet we have the assets, the asset column, the liability column. And we see that the passive income investing style is that we focus on building assets that makes us positive cash flow, passive income, from controlling assets even when the economy is doing bad, and of course when we're not working, because an asset is a system of systems doing the selling and selling for us. Types of investments for passive income. By now, hopefully, we should have enough knowledge to understand that investing for passive income is far superior to earning any other kind of money. In order to wrap off this topic, consider the various strategies for investing in order to get passive income. Our recommendation is to identify our areas of interest and then delve deep to learn everything we can about them. Real estate. Master Investors brand loves real estate. In fact, we think it is the best investment category for passive income. Rent is what makes up our passive income in real estate. Put simply, we will have passive income if our rent pays for our living expenses. Our passive income will increase with the number of investments we have or their size. Great tax advantages in the ease of utilizing OPM or other people's money legally to invest in real estate are further advantages, because other people's money is the bank's money, is debt, is the saver's money. And so the banks are in the business of lending money, and we are going to be that authority that goes to the bank and shows them a cash flow analysis of a property so that we can raise the capital, right? So when we master how to put a deal together, the money will find us. Paper assets or stocks. Although stocks aren't our preferred choice for capital gains, invest in a master investor or passive income because it brings in capital gains income. Stocks, we don't think they are a great source of passive income. Dividends and covered calls are two strategies we can use to invest in companies for cash flow when it comes to investing in stocks. So there are strategies that we can use to create some sort of passive income from stocks, and we explain that inside of our ebook by clicking the link on the description of this podcast, or if you're watching this on YouTube, somewhere in the description of this video, you'll find how to build cash flow with internet turn passive income on ebook, which explains exactly how to do that in one of the chapters. about methods to build cash flow even with stocks. The next one is business. To take us of the advantage of the B side, we do not need to be a business owner. Investing in the ventures of others is a fantastic method to generate passive income. As an investor, we have the power to direct the company towards enormous profitability, typically by holding a board seat. We are not accountable for running the day-to-day operations of the business unlike a business owner. To compensate for our capital, we just get to enjoy the earnings of the positive cash flow. Invest now to generate passive income. Although it is terrific technique, investing for passive income requires financial intelligence. Begin by gaining as much knowledge as we can on the investments that most interest us. Study as much as we can about money as well. Enroll in classes, work with a coach or mentor, and take advantage of all available free content here at Master Investor and other platforms. Resources that are wise, there is an abundance of them available online, more than in the history of humanity. All we need to do is seize the opportunity and proceed accordingly. Start investing in high quality financial education here with us at Master Investor. Welcome to our community, bring you the good and bad news of money. Remember, start investing for passive income, master the principles that work in all economies. Let me know if you have any questions. I appreciate you tuning in today on this amazing day here at Master Investor. Remember, we all have an investor inside of us. It's all about developing that investor to be a master investor and not an average investor. Start investing for passive income. Create an exit strategy if you want to quit your job as soon as possible. It is possible to do it because we have the tools, resources, and we can become wealthy fast. There's no reason to take forever to accomplish financial freedom. That's when we have our assets paying for our living expenses, and then we can continue to build true wealth, which is more freedom, more excess of positive cash flow through our assets that we control. Anyway, I'll talk to you on the next podcast, bringing you the good and bad news of money, the business principles that work in all economies, and stay extraordinary and wealthy. Bye for now.